Certainly the holy grail of futures is a Bitcoin deliverable contract. It's more from what we see Bitcoin hitting a bigger stage, coming on and having mainstream market participants start to invest and have exposure to it. Certainly a cash-settled futures contract doesn't attract some of the individuals like miners that want to hedge their revenues. But all in all, we look at it as a good thing, a positive thing for the Bitcoin ecosystem in general.
Do you anticipate more professional investors jumping into this market?
I think that with the futures markets, everyone's kind of feeling out this new vehicle, specifically given that it's not a Bitcoin deliverable contract. But yes, of course, I think as we look at our products across our investor base with our vehicles, we see quite a few professional investors, institutional investors start to come into Bitcoin.
I had a guest on the show earlier who described Bitcoin as the biggest bubble since the Dutch tulip bulb mania of the 17th century. Why is it not?
Well, it's a great debate going on right now. I mean, if you look at the Bitcoin chart and you flip it over, for example, it looks like the purchasing power decay of the US dollar over the last 80 years.
It's happened in a lot shorter period of time, so I'm not sure that's quite a fair analysis, is it?
Well, sure, but let's also look at a few fundamentals here. Right now, Bitcoin exchanges are averaging 500,000 new users a day. So that's one of the, in our research at CoinShares, that's one of the strongest correlations that we've seen to price.
Why is the growth of a market necessarily a key to intrinsic value or long-term growth?
Well, let's take intrinsic value out of this. Let's actually talk about, we're talking about network effect here. Because think about
Metcalfe's law all you want, but I don't think that's necessarily relevant to intrinsic value, is it?
Well, let's think about, with Bitcoin, the more people that are using Bitcoin, the more valuable Bitcoin gets, especially as it's a scarce vehicle. And what we see here in the early days... What
value is that? Is it real value?
Well, it's money. It's what you see is it's money that's equity-backed, not debt-backed. That's the important thing here. The world is flooded with debt. You have sovereign debt levels.
But what if people are buying Bitcoins with credit cards? What's the difference?
Well, they're turning that debt into equity-based value that they can share on the market. That's the real important thing here. This is equity-based money, not debt-based money. And this is at the start of something that's very important as you look at a world that's flooded with debt.
So you're talking about the start of something very important. What of the influx of professional investors is the start of the sort of end of Bitcoin?
The end of Bitcoin. Well, I mean, what you have now is you have a vibrant cryptocurrency community. You have over 850 coins now. We view this as a positive thing. You want Darwinism. You want natural selection because the future is decentralized digital monetary assets. Whether it's Bitcoin, whether it's Bitcoin 2.0, we'll see. But the point is that you want these competitive coins competing with each other. And ultimately, this industry is going to be stronger in the long term. And that's what we're very excited about. So it's important, if you're an investor, to start thinking more than just Bitcoin. Start looking at Ethereum. Start looking at some of these others. This is a story that's much bigger than Bitcoin now.